So we tend to think of things like abortion and social issues in the Supreme Court, and even some of the regulatory issues, as more in the zone of politics or even political philosophy. Can they affect the business world as well?
Yes. So when you step back and you think about the United States, the U.S. has a handful of really true competitive advantages. One is rule of law, a second is demographics, and a third is one market. And by one market, we're a market of 350 million people with essentially one set of rules. So when a company goes to do business in the United States, by and large, it's one set of rules for the whole country. And what the Supreme Court is doing is essentially saying, look, the administrative state has become unwieldy. It's taken on too much responsibility. Congress really should do a better job of writing laws more specifically. And we're going to start to whittle back some of the things that the administrative is doing. Well, on paper, that sounds great. I mean, perhaps there'll be less regulation, maybe the laws will be clearer, better written. But the reality is Congress is rife with polarization. It's difficult to get anything done without a supermajority. So the reality is that there's a vacuum. And so we're going from a place where we have a clear sense, we may not like all the regulation, but we have a clear sense of the rules, to a place where the rules are uncertain. And increasingly, the states are stepping in and making decisions on many of these rules. And what's ending up happening is we're going to end up with multiple rules with multiple states, and candidly, probably written by groups or people that aren't as competent as exists in Congress. And that's worrisome.
Take us into your business specifically. You've got a very large advisory business. You've also got a big asset management business. How do those challenges with perhaps a very diffuse set of rules and regulations, laws, how could it potentially affect your business?
Well, let's take asset management as an example. That's probably the easier one of the two to see the impact. So you have a state that essentially says, look, we don't want to hire an asset manager that is worried about climate. And so they will restrict the ability of a state pension fund to invest in that manager. Another state may say, you know what, we will only invest in managers that take into account climate. Now, if it's a small state with very little population and very little assets under management in their state pension funds, maybe it doesn't matter that much. But when we start having big states dueling on this, it's a real problem.
Well, we're starting to see it, if I can say this, in places like Texas and Florida and California and New York, just to pick four, that seem to have different attitudes toward these things. Are you seeing it affect your business so far, or is this more on the horizon?
I would say it's on the horizon, but it's worrisome. And you sort of think about it. You have an industry like insurance, which has 50 different regulators in 50 different states. That's a complex industry, but that's a real exception in the U.S. economy. Most of the U.S. economy is dominated by or driven by companies that are able to operate in all 50 states without a concern. And this is something that I think really runs the risk of upsetting one of the true competitive advantages of the United States.
Is there another factor here with the Supreme Court, which we saw this last term, where they're changing their mind? They're overturning precedent that's been on the books for a long time. And there's a reason for what we call in the legal business stare decisis, right? So there's a predictability for business.
Okay, so go back to what I thought were the 3 or 4 competitive advantages of the U.S. Big unified market, demographics, and the third one is rule of law. And rule of law, when you really think it through, is really about predictability, certainty, conservatism in that sense. The idea that you can predict what's going to happen, you have an idea of what the rules are. This is kind of upsetting the apple cart when you go back and you shift.
And what does that do to the competitors of the United States over against Europe on the one hand or China on the other? I mean, China certainly has had issues with some of that unpredictability in recent days.
Yeah, so look, this is not overnight going to upset the competitiveness of the U.S. versus Europe and China, but it's headed in the wrong direction. The advantage China has compared to almost any other market is it's 1 billion, 2 billion, 3 of people with one market. And in many respects, that is the advantage that a lot of major Chinese companies have, is a very big unified market. And so that's the risk.
Talk about your business right now, because we've got a very strong dollar. As I understand, that may have affected your business to some extent. We also have a slowdown. We've seen just this week, we saw the GDP numbers. How's it affecting your business?
So on one end of the spectrum, it's highly resilient. The advisory business had a strong first half, and the outlook for the second half seems pretty strong to us right now. The question for the advisory business is going to be what happens in 2023. What's the build like of backlog, the build of assignments and such into the latter part of this year. And that largely depends on what happens in the credit markets over the course of the next couple of months or so. The asset management business has obviously been subject to the turbulence of markets globally, but performance has really improved dramatically, as we would hope it would in an environment where quality and value should be performing. The challenge in our business, just compared to many of our peers, is we are global. We're an international business with, in the asset management business, a high exposure to non-dollar assets, and in the advisory business, a very significant business outside the United States. So the impact of the move of the euro and the impact, you can see it on the Bloomberg Dollar Index, the move of the dollar against virtually every currency in the world has negatively affected us. But at this point, it looks like, there's been a 30% move in the dollar against Bloomberg Index and against the euro over the course of the last couple of years. I would guess that there's probably not another 30% to go. So maybe the worst is over. I'm not sure I'm calling a recovery yet and a weakening of the dollar, but I think probably the worst is over.
Come back to the uncertainty we were talking about. We were talking about the Supreme Court, but there's all sorts of uncertainty. There's a lot of uncertainty in the marketplace right now.
Yes.
We don't know exactly where the economy's going. We don't know where a lot of geopolitics are going, things like that. Is that causing people to sit on their money, essentially, particularly in the advisory business? Do you have CEOs saying, you know what, I'm just not ready to move right now?
I think it's everywhere, because what's happened is we've gone from, just taking the economy as an example, 3 months ago, everybody was highly focused on inflation, as they should be. Today, inflation's in the rearview mirror, at least with regard to the bond market, and now everybody is focused on recession. And so the question now is, where's inflation going to be? It's clearly going to come down from where it was 9 or 10%. Does it level out at 4 or 5 or 2 or 3? There's a big debate about that. But in addition to that, we now have the question of recession. How deep? How long? And until there is what I'd say, a new consensus, a new set of convictions, people are going to be cautious about putting money to work. People are going to be cautious about making big decisions. And I think that's going to unfold over the course of the fall.
Ken, finally, on the inflation front, you take a long-term view for your business. Are there some structural factors that suggest we are going to have a higher level of inflation than we had in the past? Whether it's demographics, whether it's not a deglobalization, but something of a pulling back from some of the globalization, some of the frictions between the United States and China, for example?
Well, the one friction that is clear is we all got spoiled by just-in-time economy, where everything was minutes away and predictable. Supply chains have been interrupted, logistics have been interrupted. Part of it is COVID, part of it is a shift in wages. China's become a more expensive place to do business, so supply chain shift as well to places that are perhaps less reliable. And as a result of that, we're not in a just-in-time economy anymore. And there's probably more friction than there used to be. And that probably is something we're going to have to live with.